Hello, everybody. Welcome back to another episode of the Loan Officer Wealth Podcast. We are blessed to be here with Jeff Miller on the show today. Jeff, welcome to the show.
Well, thank you. Thanks for having me.
Awesome. Number 16 on the Scotsman's Guide this year. A huge accomplishment. Congratulations.
Thank you. Pretty proud of it.
Excellent. Well, in today's marketplace, to be a leader is certainly something. So I know all of our listeners are going to be very interested in how you're producing that volume right now, but I would like to start with a little bit of your background, because I find that often the philosophy of how you got started and what you've learned on that journey is often the key to where you are today. So do you mind telling us a little bit about you and kind of like, how did you get into the mortgage business and how did you get to where you are today?
Yeah. So gosh, it was about 1995. I had a neighbor. At the time, I thought I was going to be a dentist or orthodontist. And I had a neighbor friend, and his father owned a mortgage company. And I was always intrigued. I would sit with him when he was working at night. He worked from the house a lot. Him and I just always had some really great conversations about what he was doing and what he was working on. And I kind of, I looked up to him and I admired that he was really in control of his future and his finances by being self-employed. I come from parents that were more, blue collar in the sense that they put in the 16-hour days and they worked their tail off in construction. And, they always just said to me, don't do this. The body hurts. Don't do this. Get an education, And so I was leaning towards getting educated, which I did. And I found myself admiring this guy and my grandfather, who was heavy into real estate and had a lot of success. And I just always had an interest for it. I was always interested in that. And so, at some point, I was still in high school at that point, around my senior year, he offered to let me come to work at his company in Irvine. And was not glorious or glamorous. I ended up working in the shipping department and working on manila folders and making copies and organizing documents and slicing my hands all up and realizing, well, this isn't what I thought I was getting into with not being blue collar. So I did that for about 6 months or so and got to see the corporate world and how it operated. And they were a pretty big operation. They had a good 200-300 employees and doing a lot of volume. I then finished up my JC, went to San Diego State and finished down there. When I got done with my psychology degree, I realized, I really can't make any money at this unless I get my doctorates, which I am not doing. It's beyond burnt out with college at that point and wanting to make a living. And so I actually reached back out to him and he referred me to somebody to get a loan officer position. And I did that. And I worked there for about a year. And I learned what a sweatshop looks like and how to be a terrible boss. I had just a horrible environment to work in. Completely disrespected, didn't get paid on time. A lot of the bad stuff you hear about, mortgage industry was going on in that office. And I lasted about a year there before I just had enough. And I went through the whole entrepreneurial myth, man. I said, I could do this myself, and I jumped out of there and I applied with American Home Loans and got approved as a branch there. Had a partner at the time who, this is kind of crazy, but he built us a website. And that website, he figured out how to do this thing called Overture. And Overture was basically pay-per-click ads. And this was pay-per-click ads before Google AdWords or, SEO ranking. Any of that stuff was even at play. And somehow he came across this. He was going to UCLA when he graduated, came to work at the mortgage company. And so him and I just said, hey, let's go do this on our own. He was able to generate us leads. I knew how to get loans funded and sold. And man, we did that until that was like 2001. And so we did that like July 2001. We did that through basically '06. And, you know, in '06, I, uh, I just kind of burnt out, to be honest, on
Hmm.
mortgage. I was doing like a lot of people that were hungry. I was just working crazy hours. And I mean, I can remember like waking up at like 4 a.m. at my desk being like, what the heck just happened? Trying to work through the night to get loans funded and the chaos and all that stuff. So towards the end of 2006, I sold my partnership. I got out and thought I'd made a ton of money and I was wealthy enough to just live off of what I made and the investments I made, and acquired a bunch of real estate, and life was good, right? Just got married and bought our own house and things were good. And next thing you know, in '07, uh, my tenants stopped paying, the rents weren't coming in, and I had a lot of mortgage debt. So I kind of went through a lot of what, a lot of the clients went through that were, buying stuff just too expensive and not cash flowing well. And so I really learned a lot during that time, doing it wrong. That's really what I did is I made what I thought were good investments, and turned out I was not savvy enough yet. And so we went through that. I parted ways and I just stayed around the industry with referring clients out, but I took a little hiatus and went and explored some other call center ventures and had some fun with that, learned a lot, and really, um, it wasn't, 2012 was rough, and all the tough times everybody went through that stayed in mortgage. Um, I experienced all that too, but it wasn't really until 2015 where my partner and I realized that, man, there is such a need for self-employed people to be able to get loans.
Hmm.
And it really happened with us firsthand. We were trying to buy stuff in 2012. We couldn't get financing. Hard money was literally your only option. Even that was kind of rough. And so we started dabbling in just the non-QM space, 2015, and it was brutal. Um, and I don't mean brutal because of the clients. The clients were amazing because every client we talked to was in a 12 to 15% hard money loan, and we were able to offer them a 9% loan, and they were ecstatic. But what was brutal was working with the lenders. I mean,
Hmm.
it was an absolute nightmare. I won't name names of the lenders to be respectful, but we signed up with about five. There's only a handful of time that we're doing NonQM, and we signed up with pretty much all of them that we could get our hands on and tried them. And at that time, I wanted to learn it inside and out, so I was selling it, processing it, doing fundings, everything as a broker. Um, and so I was just seeing, all the issues and this ridiculous guidelines. And the biggest issue we saw all the time was the lenders would get a loan clear to close, and then they wouldn't sign off final on it. And it would go to QC and it would come back. It would go to QC and it would come back. And they just would always add more and more conditions. Um, and it really felt like they were just too scared to fund the loans. Like they didn't have enough of them to write the loans and stuff like that and sell them. Um, and I mean, our average, and this is crazy, our average turn time was probably about 90 to 120 days, somewhere in that
Whoa.
range. That back in 2015, it took that long. Like I remember having a client sit in my office one time. He's like, "What the heck are you guys doing?" I'm like, "Man, I'm doing my job. I swear, we submitted everything perfect. This should be signed off." And they would just come back with just the littlest things because almost like making up stuff. And so it was just we were just pulling our hair out. And then I would say like mid 16ish, it kind of turned a corner, and we found some new partners that really knew that wanted the loans funded. Um, and then it's kind of been just stay in our lane ever since then. The refi boom hit like crazy, and I know we didn't make as much money during that time, or I should say, we left money on the table by not focusing on a paper or VA and FHA and all that. But you know what we did? We stayed in LA, and we learned to get better and better at what we do here. really, we had a lot of success still, but you're doing one non-QM loan is probably the equivalent of doing 5 to 7 A paper refinances with you if you look at the employee time and my time. And so, we're proud, we're funding 40 loans a month and we feel pretty good. And then you have a friend who works over at better.com and they're doing 40 loans by themselves at A paper, and you're like, wow, are we doing good? You start to question yourself a lot. But um you just stay the course. And the way I see it, the way we've survived is treating people right, and they come back.
Yep.
And so all those people that we worked with for all these years come back. We were like a 65% return rate. I mean, pretty high. And they still, refied as rates continue to go down. So that was, great. So I did capitalize a little bit on that. Um, but where it's really been a home run for us is now that the A paper pool's dried up, or at least drying up, or maybe it already is over being dry. I don't know. We'll see what rates do this year. But we're still in communication with those clients, and they're still in need.
Yep.
Yeah, and one of the neat things that we didn't anticipate when we went into this lane with self-employed people was how big their networks are and how
Yep.
much opportunity is in their networks, right? So we always, you always talk to loan officers about having a good network, your CPAs and your planners and well, when you have a client who's self-employed that owns even a mechanic shop or a dentist office, um, you're getting their loan, but you're getting their family's loans, because that person's kind of, they're seen as the more successful person, or they're more savvy individual, right, in their family, and all of a sudden they have a network of people they're referring to you. And so that kind of that was just a huge benefit that we didn't anticipate. So
Yeah.
yeah, our lead cost was crazy high, and frustrating at times. You're looking at crazy cost per acquisition rates. But then as the years have gone on, you start to realize, well, okay, that cost per acquisition actually didn't turn out so bad if we did 5 more loans because of this one person. So it's allowed us to stay in this lane and thrive. I mean, right now we're going to do almost 400 loans this year. And I think we'll break 200 mil in non-QM. So it feels pretty good considering. I would admit that this year financially has been not as successful as other years, but I'm proud that we're going to end the year with a profit, and we've been able to keep everybody on board and actually hire some more people to help out. And um, all in all, I think that's a huge win, considering what we've faced with the Fed rate hikes
Yeah.
starting last year.
I could not agree more.
Yeah.
Tremendous success. So there's so much to unpack there. So first off,
Sorry.
the um, one person equals 5 loans.
Yeah.
So first off, the breakdown of your business, how much of it now being, as big as your database is, how much comes from referrals from past customers? How much is coming from professional referrals, financial planners, CPAs, that sort of thing?
Yeah. Well, so I don't know that I could give you a percentage in comparison. We haven't done a strong marketing campaign to planners. We tried that in 2016, I think, or 17. And we did have a little success with it. It was good, but I wouldn't say our effort was 100%,
Mm-hmm.
right? One of the campaigns we had a lot of success with was a realtor campaign.
Mm-hmm.
I mean, we did in 16 and 17, we did email blasts to realtors. Simply all we did was buy the list and drip email, 1,000 emails a day. And the irony was we didn't most of the loans we did from that were from the realtor's own properties. They weren't from the transactions they were doing.
No way,
It was,
really?
it was crazy. Every single time they call in and say, "Oh, well, I've got this client," and yada yada, and then 5 minutes later, like, "What about my loan?" And then it always turned into their loan every time, and that was the one that ended up closing. Right? It wasn't the home the buyer was trying to get; it was their loan captured, and continued to build on that. But yeah, I don't know that I can say. What I can say is, because our clients are CPAs and business owners of other industries, a whole bunch of industries. It's all of our client base is
Yeah.
you know um, self-employed people, and they're all a referral partner in that sense. Now,
Yeah.
we don't treat them the same way where we're, dripping, emailing them about sending us more clients. But what we do is we treat them right. We send them gift packages when we close. We send them holiday cards. We send them anniversary cards. We send, end of the year packet that provides them all their closing statement, and so they can provide to their CPA. It's, and then we send, our CRM is really robust. We are constantly back in front of everybody, um, giving them advice, giving them suggestions, tax incentives, tax programs where they can save some money. Just always finding something new to send out that might be, advantageous to them, so that they look and they see our name,
Yep. And any phone calls as a part of that database marketing program, or is it mainly email and physical mail?
Yeah, I mean, we have a text campaign that runs with it. So we do have a mild, funded clients, might get a text every like 3 to 6 months after they've funded. Um, it does come up to our system to reach out to them after 6 months. We also reach out to them. It's automated, notifications are automated that will reach back out to them within the 30 days of closing to make sure they got their mortgage statement and they know where to make the payment. So just that little bit of extra hand holding, because the way we look at these clients are they're self-employed, they're busy, they're running a
Yep.
business. A mortgage isn't something they want to spend, time thinking about and worrying about. And we want them just to give us the data we need, and let us tell the story, let us put it together, let us not tell you no. A lot of these clients that we face, they've all been told no by the
Right.
banks, and they're wealthy people. They might have 5 million in the bank, and they're trying to do a $1.5 million loan, and Wells Fargo won't write them a loan because they don't show anything on their tax return. It's like, okay, who's more qualified than that? You're gonna do a 3% down loan with 580 FICO, or 3.5% down with a 580 FICO and 2 months reserves, and that Wells Fargo will write as an FHA or something. So uh, to me, I love our client base. Um, I love hearing their stories. I love hearing their success. I love hearing, about their business and how they got into it, much like you asked me. And everybody just has a really neat journey. And and like the creative ways that they generate money, sometimes you're just baffled. You're baffled at um, some of the success people have with just a very simple idea. It's
Oh
like,
yeah.
oh my God, how did I not ever think of this? We get
Right.
that all the time.
It's
Yeah.
yeah. So one of my friends, they run a recycling business. So they get paid to take old tires away from dumps, and then they repurpose it and sell it as a raw material. So they actually get
Oh,
paid to get their product
nice.
and then to sell the product. It's just like, what a simple, incredibly easy business.
Right. Wow,
Awesome.
somebody's paying you to get your own inventory. That's pretty genius.
Right? Now, you mentioned something pretty cool. At the end of the year, you send out a tax package. Do you do that to all clients because they're all working with some type of financial planner?
Yeah, we do. It probably would be a good idea. I think where you're going with that is, why aren't we getting in contact with their CPAs at that time, which would be smart. We are not doing that, but that's a good idea. If
Awesome.
that's where you're
Right
going
on.
with it.
Cool. So there's one nugget of value for everybody on the
Yeah.
call. And
Yeah.
then, Jeff, I do have one other question for you. So, because I have experience in the mortgage industry working with self-employed people and second
Hmm.
mortgages and private money and that sort of thing,
Yeah.
um, do you ask for five-star reviews as the deal is closing or once the deal closes on Google? Because I find that those business owners are more receptive to leaving ratings and reviews because they understand
Yeah.
because they run their own businesses how
How
important it
valuable
is.
it is. Hmm.
And then, the other portion of that is it's a whole lot easier to get referrals from them because they're so well networked with other people. They're always in masterminds or networks. Or you gave
Yeah.
the example of an orthodontist earlier. An orthodontist knows all the dentists, all the doctors, all the other orthodontists in town, and they're always meeting and talking and networking and sharing. So I'm just wondering if you have a process in place to get those reviews and then to get those referrals further on down the road.
Yeah, I mean, our process is at closing. Our processor sends out the closing statement to the client. It says, "Congratulations, thank you for everything. Here's your first payment date. Here's where you're going to send it. That kind of thing." It has the attached first payment coupon, has the settlement statement, and then on there it asks for a review, and it give them a link, right to Google and Yelp, so they can quickly post it. Um, then the LO reaches out after that email goes out, they reach out and ask the client again to remind them. And then we have an automated system that will send them another email, every, I don't even know how many days it is, but it goes out for a little bit of time. They'll send them a couple more emails asking them for that review. Um, yeah, I mean, we have a pretty good amount of reviews. It is frustrating at times that Yelp likes to hide a bunch of reviews. We have like 200 reviews that aren't, you have to click down at the bottom to see them, but that's their system. That's how Yelp works.
Yelp shenanigans. That's why we are a huge
Yeah,
proponent
I
of
can't
Google.
stand it. It drives me crazy. But
Yeah, you and
all in all, yeah, we have pretty strong review on both Google. And so, I wished some of the people here would do, a little more effort on asking for that. But it's human nature also to fund that loan and be done with it and feel like, okay, that's done,
yeah,
right? But the successful people are the people that maintain that relationship. I mean, there's just no ands, ifs, or buts. If you're going to be transactional and you're just going to be an app taker and that's what you're going to be, and you're always going to be waiting for the next lead to come in, and you're always going to be dependent on the next lender or broker that you work for to get the next lead.
yeah,
But if you treat these people, your clients, as people, and learn what's in their life and what's going on, and you take really good notes on that, and you become an asset to them. They can call you and ask questions about something they're thinking about investing in. That's a game changer. And that's how I operate. I make sure that I know my clients inside and out. And when they call me and they ask me, we had talked about a North Carolina property they wanted to buy to do an Airbnb on 2 years ago. I have that in my notes. I'm reading those notes when I'm talking to them, and I'm bringing that back into the equation because I want them to know that I care about what we talked about.
yeah,
And to me, that is, that's as important as anything we do if you want to have referrals.
yeah, yeah. I could not agree more. I want to be respectful of your time, Jeff, and thank you
Sure.
for being so generous with your time and your knowledge. Um, Still an interesting market out there. What is your recommendation to other people in the mortgage industry, other loan officers, other brokers out there on what they need to be focused on right now in order to succeed in today's market?
Yeah, that's a good question. I unfortunately a lot of people were working for the shops where they were transactional. The big lenders where it was just boom slamming them out. Um, and so they're kind of at a loss right now trying to figure out what the heck am I supposed to do. Um, and I think the easy thing is just to start within your network. I mean, if you can't find somewhere to go, like Truss, where we provide leads to to LOs, um, then you got to start in the trench. You got to get on the phone. You got to be walking around and trying to meet people and get into these different networks. Like you said, there's a lot of self-employed groups, clubs that you get into one club, but you could do 50 loans from that, right? Like, it is totally possible. um, those groups like that, they become such an inspiration to each other. When they recommend somebody, it's a high recommendation.
Yeah.
Obviously, we're just passing the tax season, and so CPAs right now are they're looking for something in some way to get back in front of their clients after this, after this year turns. They're going to be busy again, and so they're doing their end of the year meetings. Now's a great time to be talking with CPAs and trying to figure out, how you can be a benefit to them. Just putting together a little presentation for their clients on, if they were to do an investment, the CPA can then be the smart person in the room and say, well, if you were to buy an investment property because you made this huge profit last year, you would have had this write-off, and um, that's an asset, right? You're providing an asset to or a benefit to the CPA for him with his clients. And so I think just, there's always the realtor stuff. I, I don't, I'm not a fan of, going and sitting the open houses. I know everybody talks about that. I've had realtors ask me if I'll pay for their marketing, and I tell them the same thing. I said, no, I'm going to do a good job at what I do.
Mhm.
And what we do really well in our system is we associate every client a realtor sends to us is associated with that realtor. And so every realtor that works with us, I can pull up a list of how many transactions I've done just with that realtor. And I can email them one screenshot update that shows them what's going on with all the files we have, or all the fundings we did this year. And then we make it a point to CC our realtors whenever we're, just reaching out for a quarterly update or a, semi-annual update with a client. I include the realtor so they know I'm doing my job and I'm staying on top of it, because most realtors don't have a CRM. They
Yep.
don't. They just don't. They don't have real marketing campaigns. So this is kind of our way of helping them market and stay in front of these clients, even if after they've sold them a house.
Yeah, that's so we partnered with the Mortgage Marketing Animals and Carl White,
Mm-hmm.
and
Mm-hmm.
he has the daily success plan, which is, a lot of what you're talking about, going out,
Yeah.
staying in front of those contacts, proven campaigns. And what we did was we took their scripts. So the emails, the text messages, is basically like you can drop those people into the campaigns. It sends out the proven messaging templates. But when people reply, what we've done is we've built an AI engine that has the conversations with them. So
I
we
love
have an
this.
AI engine for past customers that gets trained on the brand and everything. And we've got an AI engine for realtors. We've got an AI engine for financial planners. And it takes the response that they send back to the CRM, sends it out to a chat GPT conversation engine. It answers the question with the prompt that we've given it on, hey, here's the frame of the conversation,
Yeah.
here's your brand voice, here's everything. And it has the conversation with the realtor and gets the
Wow.
realtor to book into the appointment or whatever it is. So it's like old school and new school kind of like merged
Yeah.
together as
With
you
less
just,
manpower.
yeah, exactly.
You can be
And,
golfing.
yeah, that's right. Well, or
Right.
networking, like actually
Yeah.
on what we call the money making appointments,
Yeah.
while the machine, because you're right, most loan officers don't have a consistent marketing CRM, and
Mm-hmm.
consistent is the main word there. Like if you're going to convert CPAs, if you're going to stay in front of your pre-approvals, like you need something that consistently does the work every single week. So that's super valuable. Thank you for sharing that.
Yeah.
Awesome. One final question. The name of the podcast is the Loan Officer Wealth Podcast.
Mm-hmm.
And the reason that I named that is because I believe that the mortgage industry is one of the greatest wealth creation industries that exists out there, because we have the opportunity to, we're not selling pencils. We get paid
Yep.
pretty good for what we do.
Yep.
And I want to provide at least one piece of information that a loan officer can take away and actually build wealth with. So you mentioned being really big on real estate investing, a lot of
Mm-hmm.
experience there, ups, downs, booms, busts. How do you approach investing in real estate today? And what's kind of like your philosophy on, like, do you have to have a cap rate of 5% to look at something? Like, what do you look at as your philosophy for investing in real estate?
Yeah. So, early on for me, I made the mistake, and I was making, silly money in 2005, and I'm just trying to buy every property I get my hands on pretty much. And so I cared less about what the rent was and more about could I acquire it when it was so competitive. And I signed, into these loans and purchase contracts where I was, maybe losing $500 a month on this house and 1,000 on this house. And, you know, all of a sudden you have this, negative cash flow that's pretty significant. But I didn't think that through back then. I just was making a lot of money. It didn't matter, right? And I was young and naive. Now I take the other approach. I try to find a property, and this is hard to do. So this isn't a general rule, it doesn't apply in California, but I try to find a property that basically is 1%. So if I'm buying it for, say 150 grand, it's got to generate $1,500 a month in rental income. And so a little bit kind of simple way to look at it. But for me, that's allowed us to make sure we're creating cash flow on every property. It's a little tougher now with rates up, but we're still doing tons of loans for investors. The DSCR product's really hot, and investors know, look, I'm able to get the properties I wanted to get before because I have less competition. Rates are going to come back down and I'm going to refi. So I'll be right back in the position I would have been in, except for now I have an opportunity to actually buy the house. So you can still be savvy and successful in this market. Rates don't last for 30 years. It's a 30-year term. It's not a 30-year, you're not signing up to have the same rate for 30 years. It's going to go down at some point. Do we know when? No, everybody has speculation on it, but pretty confident in the next 5 years it'll be lower than 7%. So smart investors know that they'll be able to increase their cash flow that way over time, and then they'll also be able to raise rents. So I don't think now is a bad time at all. But you just have to be really, really picky about what you're signing up for. I've been hunting mostly investment properties. Multifamily stuff, just because the cash flow is a little bit stronger on those versus single family. But really, just I'm in California, and that's pretty much off the table. So we pretty much just do other states for the most part.
Okay, awesome.
Yeah.
Well, that is a great philosophy and an excellent lesson, Jeff. Thank you so much for sharing with us. So, if people want to reach out to you, find out more about your company, your business, where do people go to learn more about you?
Well, just Google Truss Financial Group and you will see us for a while. Definitely give me a call, 949-358-6656. And my assistant will screen the call and, see what it's all about. And then we can have a nice conversation, or she'll send you my calendar, and happy to talk with whoever. So
awesome.
Appreciate the time.
Amazing. Likewise, Jeff, thank you so much. And thank you y'all for listening. Make sure you hit us up with a 5-star review, share this